Season 2, Episode 10. Guest today is Andrew Becker, Chief Engineer at the Probate Engineer. What's up, everybody? Welcome back to the Kansas City Commercial Real Estate Market Pulse. I'm Logan Freeman with Midwest CRE Advisors, and today we are joined by Andrew Becker. He's a real estate operator and systems architect known for helping teams engineer scalable growth through lead gen. Love me some good leads, man. Leads. Give me the leads, right? Lead gen, operational structure, and niche revenue channels. So if you've ever wondered what it actually takes to turn a real estate business into a machine, Andrew specializes in building the systems behind predictable growth. I couldn't be more excited. Andrew had me on his show here recently. We had a blast talking all things Kansas City commercial real estate. And what really struck to me was looking at this industry, this entrepreneurship journey as an actual business. So we're going to get into that today. But we host this podcast for one simple reason. Clarity beats noise. And we all know that there is no shortage of headlines, opinions, or predictions about commercial real estate. And I think what's missing is grounded market-specific insights from people actually doing the work, listing, leasing, underwriting, and closing commercial real estate deals. And on that note, if you're interested in any type of commercial real estate in Kansas City, just head on over to www.mwcreadvisors.com. Here's our team, all the way from residential land for subdivisions, all the way to data centers, medical office buildings, multifamily, retail, small bay industrial. We got you covered. So reach out, find our team. We're growing rapidly, which is very exciting, but it's all about the people behind the business. So definitely reach out to Joe, Mitch, Derek, Chad, Nathan, Nick, Katie, or myself. Love to chat with you. All right. Getting into today's guest, Mr. Andrew Becker. Man, you hold so many hats and titles. I mean, including, top 200 worldwide Apple Business Podcast, right? That's the Team Leads Talks podcast. You're a founder of Probate Engineers, Billions, Brighter PPC, Profit Engine Series, right? And I just want to know, man, how did you get into doing all of those things? Give us the 5-minute just journey of where you started, and then how do you go to being the owner and founder of what looks to be 4 or 5 different companies, man. How'd that happen?
Yeah, man. Thank you for having me, by the way, Logan. Super excited. I was looking forward to this one. We had such a great conversation on my podcast. So grateful that I got the invite to be on yours and to share with your audience. So let me share a personal thing about me for this all to make sense here. But I am very OCD as just a person, right? Like, you move one thing on my desk, I will know about it. Mm-hmm. I'm very things have to be a certain way. So before I got into real estate, Logan, I worked at the Pentagon as a civilian in the Air Force doing nuclear weapons stuff with the men and women of the United States Air Force.
Wow.
Through that, I learned systems, processes, and checklists. So doing the same predictable, repeatable stuff over and over and over. So if something goes haywire, there's an easy audit trail, right? So in about 2013, I decided with my best friend from middle school, we're still partners in all the stuff we're doing together, to start a real estate team. That's the one thing I don't know if it's on here. I didn't read the whole thing, but before all of this stuff under my name on this slide, we started a team together. We ran the team together. I was a part of that for about 11 years. So all the stuff you're seeing, right, like founder, Probate Engineers, Billions, Brighter, that's all stuff I learned over an 11-year period of trial and error, losing a lot of money, making a ton of mistakes.
Yeah.
And we built all these what turned out to be, new endeavors or new companies first for ourselves. So Billions is a team operating platform CRM on Salesforce. We built that because we needed it. Brighter PPC is because we ran our own PPC ads for 8-9 years, however long we've been doing it. And then people asked us to do it for them. Probate Engineers, our newest initiative, was because PPC is expensive and people need some lower, barrier of entry for lead gen. But it's all centered around I've been there, done that. Do you want the expedited learning curve here for all that we do?
That's so important, right? I mean, you basically were solving problems that you were experiencing in your own business and then became good enough at it that people were noticing and saying, "Ooh, I'd like to help with that." Right? Now, one question on that front is, my word for last year and for this year was and is focus.
Okay.
Follow one course until successful, right?
Yes.
So, as an entrepreneur, as a founder, somebody who's been in business for over 11 years, running teams, doing real estate, setting up businesses, how do you know when you should go and build something versus, hey, this is a shiny object syndrome? Or is that where some of those learning experiences were along the way?
I mean, I was that person, man. Like before I built Billions, I was on, I don't even know, 5 or 6 other CRMs, man. And
Yeah.
then we would build, hit a major function limitation, and then ditch that and go on to the next one, and then go on to the next one. We landed on Billions and Salesforce because we were told, and I would meet with like the development team at each of the big, I won't name any names, but you probably know the big ones in real estate.
Mm-hmm.
And it was always like, oh, just go, we're not going to add that, go get Zapier and then go buy this tool, that tool, that tool. And it just became so overwhelming to manage, pay for, and maintain all of that I just kind of became sick of it.
Yeah.
So for me personally, I'm a little biased when I say this, but I wish there was like a pre-built version that I didn't have to do all that for, because we spent probably close to, multiple 6 figures on tech that we just wound up saying, man, this sucks, but we have to get rid of it and go on to another thing, because we were growing at such a pace that the tools we outgrew the tools, Logan.
Yeah.
So we needed it to do more. And that predictable, repeatable, feature sets that we were looking for just weren't obtainable the way that we needed to run things.
Absolutely. That makes a ton of sense to me. Teresa Wakefield is saying strong take. Deal flow isn't a market issue. It's usually a systems issue. And the brokers that are building predictable sourcing engines instead of chasing the next transaction are the ones compounding right now. What would you respond to Teresa on that?
Yeah, I mean, that's a profound statement. I think that's exactly right. Like chasing shiny objects, trying to do all these things at all the times is like keeping your head above the water, treading water with a 100-pound backpack on. So what we tried to accomplish, Logan, was predictable, repeatable, boring stuff.
Yeah.
Like the same thing every time. So if I set an appointment and you set an appointment, there's just one way of doing things. From simplicity comes clarity.
Mm-hmm.
If it's not something that you kind of like playbook out or SOP, like standard operating procedure out, conceptually or from a technical standpoint, like technology wise, that's when things kind of get crazy and chaotic. And then when something does go wrong, it's incredibly hard to figure out why it went wrong, because you do things one way and I do things another way.
Mm-hmm. Yeah. I mean, I'm the worst at it, right? Like I lead a team of 9 individuals, and, I'm running fast, and I feel like I've tried to like put these systems and processes in place, but like there's no accountability with them. Right. So it's like but I hold myself extremely accountable. Right. But to get, and I love this quote, is like, what got you here will not take you where you want to go. Right. Something along those lines.
Yeah.
Right. And right now in the commercial real estate industry, I mean, we're in the middle of a structural reset. Right. I mean, 2023, 2024, some of the slowest transaction velocity we've seen in a long time. Big rebound in 2025, but it was really because, data centers jumped into the transaction volume. Right. But like, I think it's important with all of the artificial intelligence and technology that's coming in. I'm a big proponent of the Pareto's principle, right? Which is, 20% of your activity is going to lead to 80% of your results. I think the same thing is kind of true in commercial real estate, residential real estate, where, maybe 20% of the people are probably doing 80% of the volume, right?
Yeah.
Now, that being said, AI seemingly is going to make that fractal, meaning like the top 10% could be doing 90% or more. Yeah. It's the ones who are trying to figure out this new language of artificial intelligence and how to implement that into their businesses, right? So from your perspective, what is the biggest mindset difference between someone operating a business versus someone just chasing transactions?
Well, the former is the most important to me, being the owner that's working on the business instead of in it. So you can figure out whether it's AI or not, Logan. We just use technology. We have AI doing certain things. We can get into that if you'd like. But from an owner perspective, what I needed to focus on was what lead sources were working and most importantly, not working. And then what team members were working and were not working. So the Pareto like 80-20 principle, I think that's true too. And one of the things that we did, kind of talking about like shiny objects and focusing on certain things, is we at the beginning, before we started tracking all this automatically in our system, Logan, we were a mile wide and an inch deep, saying, oh, we need this lead source and that lead source and this and this and this, and we're doing all this stuff. And like you said and alluded to earlier, nothing ever really got done at that point. We were doing okay, but then once we actually started to, and the way we did this, Logan, is I set it up so there was one way to move stages from stage A to B to C to D all the way through close. And because of that, we collected data the same way, repeatedly, consistently. So it spit out what was working, who was working, what was not working, who was not working. So we're able to say, okay, we're doing 50 lead sources, but where's our 80-20? And over time, it was always like PPC, joint venture, probate, and a handful of like postcards and some direct mail. So we decided to go a mile deep in the 5-ish ones that were actually returning, got rid of the noise, and then leaned out that way. So the people that are kind of like the latter description that you gave earlier in this question, just trying to get through day to day to day, that might be fine, but it's going to lead to a few things. Going to lead to burnout. It's going to be chaotic and hard to grow and scale that way. And then you're going to have a hard time keeping team members if that's part of your decision. So if you can keep to the like less is more principle, like let's just do a few things, a handful of things really, really well, and work on the business by making data-driven decisions, that's the difference.
Yeah.
Someone doing it that way might be in business for 20, 30 years. Someone doing it the other way might be in business for 1 or 2 and then be like, I can't do this anymore.
Yeah, absolutely. Got another good question coming in. Where do you see commercial real estate specifically lagging behind residential operators when it comes to building their sustainable pipelines? Great question. Appreciate that.
Where do I see commercial real estate
specifically lagging behind maybe the residential world when it comes to building those pipelines?
Full disclosure, Logan, I'm not in the commercial space in terms of like lead gen for it, but I mean, the same principle kind of holds true. I'd imagine, I'm going on an assumption here, but focusing on the top, whoever asked that question, your specific ones that have closed deals in the past. And if it's still, if that's something that you can still put fuel to the fire in, just go all in even harder on that.
Yeah. Yeah. I mean, one thing that I'll say is like in residential, it's very relationship driven. So is commercial real estate, right? But in commercial real estate, you typically have, a specific asset class or geographic focus that you're looking at. So my response to that question would just be figure out what that asset class is. We call it defining your lucrative niche. And then in that lucrative niche, man, you don't need more than 100 owners. Like figure out 100 owners. They probably own multiple asset classes, and then figure out how to be so good in regards to the offers that you're making them and the value you're creating for them that it'd be stupid for them to say no to. Right. So like, I would just give an example real quick. So like working with a guy that's in Raleigh, North Carolina, Sam, if you're listening in, man, this is for you. Right. And last night we were working through this and I said, look, like, have you got on to Crexy and Reonomy and just looked at, debt maturity dates? And he's like, no. And I said, okay, well, one of the things that you can do to try to build your top 100, top 1,000, whatever it is for you is like understand who has a debt maturity coming up in the next 2 years, right? I think residential real estate's more life event, right? But you still know if you're a good top broker and agent in residential that I think the typical hold period is like 5 to 7 years for a house. So like find out how long people have lived in their homes, right? And I'm 6 years into my house and we're absolutely looking for the next one. So I fall right into that category, right? Because life events kind of happen along those 5 to 7 year trajectories. So same thing here. If you can figure out how to source deals that might need new financing, add value to those owners, they're either going to have to refinance or sell that property, right? So that's a big opportunity for you to kind of dive in and start building those lists, right? And again, we're seeing fewer and fewer deals publicly, but more happening quietly. So those relationships, right? Like I know in my neighborhood, Andrew, on the residential side, like a lot of houses do not come to market.
Yeah.
They're getting mailers. I'm getting mailers, right? If you live in a coveted neighborhood and you have a house in an area people want to live, they're going to reach out to you to try to find an off-market deal, right? So I think that that's really important to kind of keep in mind. But like, I also want to ask you this question. What do you think operators, understand about deal flow that brokers miss? And mostly around like when you're on the transaction treadmill, I've got a lot of people that ask me, how are you consistently closing deals and adding deals to your pipeline? Why don't you take that question? I take it from the residential side, just real estate in general, right? Because I think people work on prospecting and lead sources and closing deals, and then they lack on one of those other areas. So how have you figured out how to consistently keep that pipeline closing on a regular basis?
Well, at a high level, very short answer, and I'll dive into it a little bit deeper, is you need systems and processes that can handle it.
Yeah.
And by doing the same, I say this a lot, dude, but by doing the same thing predictably, repeatedly, boring way, that makes it so the outside stuff that you need to do in terms of lead gen and conversions and actually transacting, it makes it so much easier because you're not focused on the administrative low-hanging fruit type of stuff. But to answer your question, if you have this tech from a tech stack standpoint, kind of running your engine, the same is still true. Like you were just saying about being a specialist in a niche in an asset class and then just doing that really, really well. That's exactly what we did too, dude. We did PPC, Google pay-per-click, really, really well to highly motivated people that needed to sell their homes yesterday. Then we also did probate really, really well. So when someone got a probate case that they had to oversee, instead of saying, hey, we can buy your house, we can sell your house, we said, hey, we can walk you through the probate process. And we know exactly how it goes and who to bring in and how to get this to the finish line even faster. So we focus on those two things the majority of the time. And then we're consistently doing things like spending more money in ads for PPC or consistently pulling through systems and processes new probate leads every single day.
Yeah.
So just to be very clear, I was never pulling probate leads every day. I did it for the first couple of times so I could understand it. And then I playbooked it. And then I leveraged a runner to go into DC and pull them for me. So I systematized everything. So when I was in sales, meeting with you to, list your home or buy your home, I had a team and technology running the outbound direct response marketing and a team answering the phone calls, setting appointments for me to go on or for my other team members to go on. So lead gen's like payroll, dude. Like you can't just do it for 1 month and then turn it off because you're overwhelmed.
Hold up. Lead gen, double click, brother. Yeah. Rewind what you just said. I want everybody to key into that. This is, if you don't take anything away from what we're talking about today, take this away, man. Give us that again. I mean, it's like payroll, right? You had people working on your behalf doing what we'll call the lower level activities so that you could work in your sweet spot, being in front of sellers, being in front of buyers, and being able to close deals. Run that back. Double click on this for me.
Yeah, man. So it's the concept of like payroll. It's tough sometimes, but it's got to go out every single week, month after month, or your whole operation's going to die. Lead gen, you should think of it the same way. And what I am saying is before I leveraged completely out of my team, Logan, I would not be the one pulling. Let's focus on probate leads, for example. I figured it out when we first got into it about 7-8 years ago, but then I codified that process. I wrote it down. We have the playbooks, they're SOPs, standard operating procedures. So I said the pulling probates in Washington, DC playbook. And it would literally be something I could hand to you or anyone listening, Logan, that would get you 80% of the way, and you should be smart enough and be able to critical think your way to 100% of whatever that is. So in this case, it's pulling probates. So we leverage other team members along our path and along the way, because I didn't want to have to be the one that goes to DC every Tuesday at 8:30 a.m. and stand in line to pull probates.
Yep.
We got someone to do that. I didn't want to be the one that had to answer all the inbound calls from 8 a.m. to 8 p.m. while I'm sitting at dinner. We got people to do that. I didn't want to have to set my own appointments. So I got an appointment setter and a team of them that did that for us. So then I could focus when I was in sales on the revenue generating activities that kept our lights on and allowed for that growth and scale. So
Absolutely.
as we needed new things to happen, we would either get a team member to do it, and it would be very regiment and be like, here, Logan, like take this playbook. This is what you are doing. And we can audit it very easily by what I kind of talked about earlier, by having like checklists. And then the end result would automatically get reported back to me through the way we collect information via an email every night at 8 p.m. that I got that said, here are the appointments that were set. Here are the signed closings. Here's this, here's that. All the important stuff I needed to know, but I didn't want to have to go and look for, right? So that allowed me to go on appointments, close deals, bring in revenue. Eventually, I stopped going on appointments, period. And we had a team of agents that just got appointments put on. But that is how we operated, like an engine. And when something broke, we fixed it and hopefully made it better and pivoted, or whatever we did, pivoted and moved on. But the low hanging fruit, the lead gen of like logging in and getting probate leads and sending it to the mail house, and then, or going to the courthouse and writing it in a spreadsheet and then sending it to the mail house, was not an activity that was worth my time. At that hourly rate of, $10, $15 an hour, I was at $500, $600, $700 an hour type of stuff, even more. So if your desire is to grow and scale and leverage other teammates, you have to have a system, you have to have processes, or it's just going to fall apart.
So good. Rewind that and listen to it 100 times. That was fantastic. Appreciate that insight,
Yeah, man.
Andrew. You talk a lot about authority. So, let's talk about how you define authority in real estate, just beyond posting content online, right? Like what does authority actually mean? How do you start building that?
Yeah, you just do it repeatedly over and over. Like this is a recurring theme in this conversation, right?
Yeah.
So I'll skip ahead. In our office, when someone had a probate deal or a dilapidated property that needed gut renovation, we were just known for that in the office because that was our niche, that was our specialty. And people would come and say, hey, Andrew, we've got this probate lead. I don't want to have to figure out probate. Like, I know you do it. Can you just take it and pay me a referral? So we preached and did what we preached, right? And we talked about that a lot. And that made it even easier when we were talking to the PRs or the personal reps, because they would see us talking about it on social media or on our website with social proof of, video reviews that we got from a PR saying, I would have never made it through. So, and again, man, instead of focusing on like 50 different lead sources, which at some time in our company, man, we had like 50 to 100 lead sources.
Wow.
And we were like, we need everything because we need to cast the widest net. But that wasn't true. When we got really good at a handful of them and just did that day after day after day, it got incredibly easy for us to talk the talk and then obviously walk the walk and close out a probate deal or a PPC related cash offer type of deal. The other thing, Logan, is instead of casting a wide net for lead sources, we went deep, but the same was true for exit strategy. So at first we just did retail so we could help people buy or sell, but then we figured out wholesaling. Then we figured out flipping. So all the while we're talking, let's just pretend we only had 2 lead sources, right? Like cash offer type of lead source, urgency, and then probates. We would be able to talk the language and make them feel comfortable. But then I could come to you and say, hey, Logan, I know you're going through probate. I'm going to help you through this process, bring in the right people at the right time to expedite it. Mm-hmm. Oh, by the way, I can buy your house in 2 weeks, or we can renovate it and make it beautiful and list it and sell it. I'll get paid back at the back end after it closes, or anything in between. So we were not third-party referring any of that out either. We expanded our exit strategy or options for the homeowners in those two very niche lead sources. And that's what made us, and then doing everything repeatably, predictably, the same boring way over and over just led to really fast growth and expansion.
Yeah, absolutely. I mean, what you're speaking about is what Hormozy defines as the value equation, right? You've got the dream outcome. You've increased the perceived likelihood of that outcome, and then you've reduced the amount of time and capital that they have to put into it. So kudos to you on that front.
One other thing, dude, I appreciate that. One other thing I also want to say is if you are a cash offer, investor, flipper, wholesaler, or you're working probates, it's also in your best interest to understand those elements as well, especially in probates. I'll give you an example. If you are a PR overseeing the Jackson family estate and it has 10 Main Street, and I reach out to you as an investor and say, hey, Logan, I'll buy your house. I'll buy it, take it off your hands in 30 days. And then I just wait for 30 days. I might be projecting that revenue as like a $28,000, flip fee or assignment fee, right? And I'm projecting that. But then I'm leaving it in everybody else's hands to get it to the finish line.
Right.
Without no intimate knowledge of the probate process. And I'm doing myself and my team a disservice because guess what? My appointment setter is also counting on that because that's a commission he has on his whiteboard behind him, right? Because he and his spouse want to go on a trip. So this is not just me or the company or the revenue. It's a lot of people. But then I insert myself as a probate expert and I take control. We call this in the probate engineers controlling the controllables, basically controlling all the variables. So I am doing a win-win situation for you as the PR to make sure we close it, but also for me as the end buyer. If the exit strategy involved me buying it and flipping it, for example, and I've projected we're going to make about 30K, instead of just putting it in fate's hands. I don't want that. You need to control all the controllables you can. Obviously, if it gets delayed or stalled, you're trying your best. But you need to remove these hurdles and kind of take the bull by the horns, bring in your probate attorney, have them remove these hurdles so then you can close in 30 days and make that projected 30K turn into pending, turn into close.
Absolutely. Yeah. You're getting a lot of responses and likes and celebrations on that. So appreciate you sharing that.
Yeah, man.
Second stage of that, authority driven inbound is like, you build that through media, which is, builds the long-term equity, right? So your podcasts and your market reports and your video content all compound over time. And then at some point you're ready to start doing kind of paid marketing, right? So advertising, which, really amplifies an already established authority position, right? And so I think that's the key sequence is, you can do this authority driven inbound and content creation. And it's so much better if you start paid once you've got your authority sort of, figured out. And so, I mean, I've just kind of started doing some paid, leads or paid, marketing in regards to press releases and things like that. But I'd have to ask you this, like you having a PPC company and being so involved in that, where does somebody get started in regards to paid leads? Because I think so many folks like try it for a little bit and it doesn't work, or they're like, man, this is too expensive. And then they just stop. Right. And so again, I think the theme is going to come through here is like, you got to stay consistent, but you being an expert, point people in the right direction.
Yeah, I mean, there's different tiers and different levels of what you're ready for. I will say that first and foremost. If you're in retail, again, I'm not strong suited on the commercial PPC side, but I can talk very intelligently to the retail or the cash offer type of PPC. PPC, I always tell people it's like me playing catch in the backyard with my kids, Logan, and then being called into like Yankee Stadium Game 7 and being like, hey, here you go, start pitching. If you are not ready for PPC from a systems and processes point of view, from a budget allocation point of view, you will get eaten up and you will say PPC sucks and you'll move on to the next shiny object, right? So you have to have, we can have an entire conversation about PPC if you'd like, but you have to have a budget. Like going into war, if you go in under, finance and under resource, you're going to get obliterated. That is the top of the top lead sources in my professional 13-year real estate opinion. There are some major players in there spending 10, 20, 30, 40,000 a month, and you're going in with 1,000. Google's going to say, cool, we'll take your $1,000 bucks good luck, Logan. Like, thanks, but no thanks. Because there's an entire strategy around that too that happy to jump into if you want.
Yeah.
But if you can't afford it, what we do as an example in the probate engineers is we teach people how to create and own their own lead source. And this could be the same as SOI, sphere of influence, or like your network, right? That doesn't cost very much money. But if you do it and it compounds over time and you do it the right strategic way, that could bring in revenue.
Yeah.
And our forte is like lead with revenue first, get it in the door, and then start to experiment with different types of marketing. But for probate, as an example, it's a very low barrier of entry. Anyone in America can go into the 3,200, give or take, counties, figure out how to pull leads and skip trace them for very economical amount of money, like a couple $100, and make cold calls.
Yep.
Maybe they don't want to do that for the next 10 years, but you have to start somewhere. And then as you get really good and you lead with revenue, you start mailing. And then your mailing compounds. And now you're mailing 10,000, probate files every single month or whatever it is. And then more money starts to come in, more revenue starts to come in. And then you say, okay, well, what's working, what's not? Let's start to add fuel to that fire. Now we're in a position where we can afford PPC. Well, I can spend 6 to 10K a month comfortably to do that. And then you just compound and build like that.
I think what people need to hear on this is like, this is what you're competing against. If you're like thinking, man, I'm not getting much traction out there in the marketplace. This is hard. All of those things. Yes. And so what? Right?
Yeah.
Like, because
it's business, man. Like,
this is business.
Treat it like a real business.
We're talking about people and companies that are putting real dollars behind authority. They're building authority, and then they're advertising, right? And if you're just putting a social media post up on Instagram and TikTok, once a month, and you're like, man, this just isn't working for me, just know that people are spending $6,000, $10,000, $20,000 per month gathering those leads up, right?
And they've been doing that for 10 years.
That's right. That's exactly
one other
right.
thing I will expand on, and this is the most critical point if you take anything from this conversation, Logan, is you need to be able to be in a position to make data-driven decisions so you can track. If you're not tracking it, there's no way to either get better at it or say it's not working, let's get rid of it and move on to the next thing. We got it to the level where we're all 135 plus reports in our system, in our CRM, we're updating in real time. And I was getting emailed those, the critical, like lagging leading indicator reports every night at 8 p.m. So I wasn't going to look for it or on a spreadsheet with a VA where if they took off a week, all my data went to shit, right?
Right.
Every night at 8, I'd open my email and I'd say, okay, appointments that were set 10, and then next day 10, 10, 10, 10, and then next day 2. Well, what the hell happened? Like I'm looking at trend analysis, and then I'm diving deep if something is off. And that's the critical data-driven decisions that you as a business owner need to be aware of. You need to know your numbers. When I left, I knew that for every interested lead, every 10.2 interested leads, we closed the deal. And then I could dive in and say, well, if we want to close 100 or 200 or 300, let's work the math out. And then I dived in and said, okay, well, PPC was the leader, probate was the leader, this postcard was whatever it was. Right. So I was making decisions to project and predict my marketing for the next quarter or 2 quarters out, while someone's still spending time trying to put everything together in a spreadsheet to see what happened last year, that kind of thing. So at that point, I was like looking at the data, and we had all these reports across 8 dashboards by like marketing, money, people, that kind of thing. And if something went off, I would click into it, dive deep, see the information I need. And I was able to manipulate it by saying, hey, I don't want to see this by, lead source. I want to see it by the OSA that signed the deal. And I was manipulating the data to show me very specific things that I needed to know in order to grow and scale in a lean, optimized manner. So that's the difference of a business, an owner working on the business and making high-level strategic decisions versus like, hey, I think this lead source is working, but I really don't know. Or this teammate is working, but I really am not sure.
So good. Yes. I mean, I think that it reminds me of a few different frameworks. One is like that people just won't do the thing long enough for it to be successful. And so they end up making pivots based off of feelings and not data. And if they would have just kept doing that one thing, they would have been successful. And so they catch themselves in like this hamster wheel of like, well, I tried this and it didn't work. Well, one, you didn't know your numbers. You didn't have any data behind what
how do you know that?
And you're just making a pivot based off of gut feel. And that's really bad, right? Like that's not the way.
It's an anecdotal decision when it should not be. It should be the exact opposite. I love this slide right here, data over emotion, because it's not me saying, oh, I think Logan's a good teammate, so I'm going to keep him on the team. It's facts. It's data. If you're an appointment setter on my team and you're supposed to set 2 appointments a day times 5 days, so 10 a week, and you're consistently setting 15 or 20 really good ones, then I'm going to reward you. I'm going to make you the top ISA that trains everyone. But if you're setting 1 or 2 and struggling, guess what? I'm also listening to all your calls. I'm reading all your text messages because everything happens inside of our one software tool, Billions, right? So I'm diving deep saying, hey, Logan, why are you saying this to people? You're saying everyone, you're going to give them $1 million. You're just setting appointments to get the appointment quota.
Right.
But we also track appointment fall off. So set to held, right? And then we can also trace it back where you set 10 appointments. We know that 5 of them returned revenue on. So we're looking at all that information, not from I like Logan or I don't like Logan, or I like this lead source versus I don't. It's like, Logan, dude, the last 3 weeks, you've set 2 appointments. Like, I listened to your calls. You're mean on the phone, or let's give you more training and a performance review, or just like you're cursing at people. Like, no way. But guess what? I'm also seeing that in real time. So I'm not letting a year go by where I'm paying you $5K a month and you're returning. Like we do ROI on lead sources and people in Billions as well. So if I'm paying you $5K a month or $60K a year plus commission, but you're only bringing back in $50K, I'm going to catch that in week 3 and not, week 52.
So good. Absolutely. I have a question. Like in real estate, you talked about leading and lagging indicators. So maybe describe what those are for people that maybe don't know. And then, what do you think are a few of those leading and lagging indicators that people are maybe ignoring and they should be focused on more?
Yeah, I'll keep it like really simple. So let's send out mailers, right? We send out 10,000 probate mailers. A leading indicator is like calls that come back in and appointments that get set. If I know in my team for probate letters that go out I'm making this stuff up, but like 30 calls lead to an appointment or 12 calls lead to an appointment, but then the calls start going down, I know the appointments aren't going to start increasing unless we miraculously start doing something different in the script, or we're just setting arbitrary appointments, agreeing to $1 million payout for everyone. So everyone's like, yeah, I'll take that meeting. So if calls start dropping, I can then use that, or rising, right? I could then use that to say if calls decrease, appointments are going to decrease. That means signed contracts are going to decrease. That means revenue is going to decrease for probates. But if calls increase, I can assume that all the other stuff is going to kind of trend in the same way. And that's the importance of that. So if you see a dip or a rise, again, seeing the same thing every day or every week, the numbers, if it goes 10, 10, 10, 10, 50, like why did it just jump up 40 points? Deep dive that, figure that out. Maybe you're just setting appointments because you don't want to be on the team anymore. And I listened to your 5 calls and they're all saying, yep, we'll give you $1 million, even though the max allowable offer is $250 for those. So there are ways you need to be involved to protect your time and money and effort as well. And that's what I meant by leading or lagging.
Yeah, absolutely. So that's so important for people to kind of think through. Now, I got to ask you this, right? Where do you see, artificial intelligence?
Oh boy.
And, maybe even media changing how real estate operators are actually executing on their deals over the next few years, man? What are you seeing in real time?
Well, very easy answer is those that aren't figuring out AI now will probably have a very hard time competing with those that do. Mm-hmm. So we use it very sparingly across all of our companies, Logan. I'll say this. I like it for the low-hanging administrative fruit type of stuff. So call summaries, analytics, that kind of thing. I am not a big fan, nor have I been sold on the AI voice appointment setting stuff or the bot conversation stuff, because in real estate, it's such a personal, person to person relationship based industry that we're in. I just feel like in order to get a little bit more lean or to not have to pay salaries, you're doing yourself and your reputation a disservice by having like a robot. And there are people that can argue the exact opposite. Like, oh, our appointment setters work 365, 24/7. They set the best appointments. But this is still a relationship-based thing. So that's number one, like making it very impersonal. Number two is just like, I don't know if you did this in commercial world, but in residential investor world, 5, 6, 7 years ago, text blasting was all the rage. We were sending 30, 40, 50,000 texts a day.
Wow.
For like $1, right? Like super cheap. And then Congress stepped in and said, hey, if you cold text someone for as many individual texts that we can prove, it's a $1,500 fine. So everyone was like, peace. There's still people doing it. God knows why, to each his own there. But I think over time, as the AI turns into and evolves into whatever it's going to evolve into, I think for sales and stuff like this, there's going to have to be a disclaimer that says you're talking to an AI powered robot.
Yep.
To click 1 to talk to a person, and people are going to be like, click. I just want to talk to Logan, man. Like, I don't want to talk to Mandy, Logan's AI bot, even though she's like really good. So that's where I'm thinking it's going to go. And all these people I talk to and read about and see on social media saying, I just got rid of my entire ISA team. ISA teams are dead. Like I'm Nancy, my robot. I'm like, man, good luck if Congress passes a resolution that takes that away. And now you're like scrambling to get people back on your team. So who knows? I don't have a crystal ball, but that's just me.
Yeah, absolutely. That's a good take. I think that, with the AI powered efficiency, underwriting deals, I think that's really, really helpful, right? Data analytics, call reports, the other thing that we're finding it to be very helpful on is deep research. Go scrape the internet, aggregate the information, tell me some trends off of that data, right? So creating this macro insight, ability very fast. Like, I think that's really, really interesting. Building spreadsheets is another one that I have found to be very helpful. You drop in 5 or 6, disaggregated pieces of information into an AI agent that's specifically focused on spreadsheets. And then you get this beautiful blended spreadsheet with a trends analysis in less than, 5 minutes. All of those things, super important. I'm not real big on removing the people and the relationship component of this. And I don't think that's going to be very successful. And then obviously it's been very helpful in regards to media, right? Like, hey, break down this podcast that we're doing right now into 15 different snippets, and then write the blog post, and then create the LinkedIn post and the social media, all great things, right? But again, as more and more people adopt that, that's just going to become noise. And the opportunity there is for somebody who actually knows how to copyright and actually put some good words onto a post, right? So use it. I like that the word that you used was sparingly. I think that is really, really a good way to think about that. Now, my favorite section, Andrew, is our quick takes, man. We're wrapping up. So I got to get into our quick takes. Every guest gets a version of the same question. What's your favorite book or podcast? Maybe all time, or maybe what you're reading right now?
I have read Buy Back Your Time by Dan Martell like 50 times. I love that book. I was in SaaS Academy when it first, like years and years ago. I love that book. I give it out to like everyone when it first came out, I guess. Excellent book about buying back your time.
Yeah.
Using systems, using leverage. So excellent book if you have not read it.
Absolutely. Maybe out of that book or something you've experienced over the last 10 to 15 years, what's one system that every real estate operator should build first, do you think?
Playbook library. So SOP library. We didn't really get into it, but the reason why I was able to and am able to kind of start these companies pretty quick, Logan, was because I took the system and the playbook library from like my real estate team. And when I started Billions, I took those same concepts and outlines and frameworks and I plugged it into Billions. And then we built up that library. So ultimately, I wouldn't have to do everything all the time. And then I did the same thing in Brighter, did the same thing in Probate Engineers. So I cloned the business model or the business operation model, I should say. And that's what I learned in that book, was to create a library. And then just like the book's title, it's like, buy back your time. You shouldn't be like Logan. You shouldn't be looking at your email every day. You shouldn't be doing your calendar. I have someone that reads every email and runs my calendar for me. I only see emails once it's been vetted. And if it's important, I read it. If not, I don't. So I gave up my email privacy to a VA on my team that's been with me forever. And he runs my calendar and he runs my email. So I'm not even doing that. So guess what? So I could focus on being on podcasts and not replying to emails when I don't need to be.
That's great. All right, man. You're the KPI master. What's the one metric that you check the most?
When I'll say when I was on the team, I always loved interested leads per closed deal. I thought that was so cool. We started at like 49 or really high, and we got it down. The lowest I ever got down to was 10.2, but that, I don't know why, but that was like my favorite one. I always wanted to see if I could get it into single digit, but never happened.
Yeah, well, I think it's because it tells so much, right? It tells you about how efficient and effective your lead sources are, and the marketing materials that you're putting out there and how it's being positioned, how it's working. So, and it drives operational costs down, because if you only need 10 and not 50, it's a lot less expensive to do that. It's really cool. All right.
Yeah, another just real quick, another one, we had buckets of revenue projected, was like off market coming soon, showing as a buyer. And then once it went under contract or we found a buyer for a listing, it moved to pending. So I always loved looking at that bucket, because I'm like, man, there's $357,000 in this projected revenue. Like, let's figure out how to pair a buyer with a listing, or a listing with a buyer. And then the bucket would it'd go down by 20K, and the pending one would go up by 20K. And then ultimately we got it over to close. That was a fun one to look at too on our money dashboard.
Absolutely. That's inspiring too, right? Yeah, that's a good point. That's a really good point. All right. So what's one of your, predictions for the next cycle here in real estate?
I'm going to stick with the AI prediction. Those who are like, I don't need it, I don't understand it, are going to be in a world of hurt. Those that are getting deep into it to make it so they're not as reliable on themselves to work in the business, so they can work on it by replacing working in the business with AI, are going to be the ones that are going to be, coming out on the back end unscathed, because I can beat you, or a lot of people, with efficiencies with AI versus doing things by hand. So I can do revenue generating activities, or strategic partnerships, or big ticket items at the highest level.
Absolutely. Jason Sneed is just asking, confirming Andrew said the playbook library. Jason, the book was Buy Back Your Time by Dan Martell. In that book, he has what he calls the playbook library. So definitely check that out. And Dan puts out a lot of good content online as well. You can check that out. Thanks for being here, Jason. Good to see you as well. Andrew, fantastic episode, man. If people want to learn more about what you've got going on, point them in the right direction.
Yeah, reach out to me on social media. I'm there all the time. My handle is the same across all the different platforms, Logan. I am Andrew Becker. So very easy to reach me there. Start up a conversation. Happy to chat or help with anything that you got going on.
Yeah, if you want to systemize your business, figure it out, get your playbook library created, definitely reach out to Andrew. I learned a lot today. It's got my wheels spinning. I was actually taking notes on my Remarkable, saying I need to do this, this, and this. Nice. So very much appreciate you being here and sharing some time with us today. This has been another episode of the Kansas City Commercial Real Estate Market Pulse. And if you're interested in finding out about what Midwest Commercial Real Estate Advisors can do for you, reach out to us, www.mwcreadvisors.com. Thanks, everybody, for tuning in. Andrew, thanks for your time.
Thank you, man.